Welcome to Beyond Disruption, where you'll learn how emerging tech is changing the world of accounting, business, and finance. Our guest experts break down the latest news in everything from blockchain to robotics, artificial intelligence to human intelligence. Tune in to find out how you can stay ahead of the curve.
Hello, thanks for listening to the Go Beyond Disruption podcast, where we share insights from inside the accounting and finance profession that help you stay ahead of the curve, whatever profession you work in and wherever in the world you are. I'm Kyle Hannon, and I'm based in the AICPA in SEMA office in the heart of London's financial district. This week's episode, Blockchain for Insurance, Crypto Assets and Beyond. Our expert guest is a returning one. After his first conversation with us back in episode 20, we're joined again as we move towards episode 80 by Dr. Stein Smith. Dr. Stein Smith has authored several blockchain courses for the AICPA. He's served as a technical editor and presenter for RPA courses, as well as for the Blockchain Certificate Program. In addition, he's currently serving as the chair of the Accounting Working Group of the Wall Street Blockchain Alliance. He'll give us the inside track on what blockchain means and the opportunities it offers to those working in or alongside the insurance industry. So we'll get some new understandings of what blockchain actually has to do with insurance. We'll hear about how the insurance industry is using it and what they may be using it to do in the future. And we'll ask what it matters for the rest of us. We'll also talk through how we, as the people that the insurance industry actually insures, can make sure that as companies, our register of assets are digitized, so we're ready to be insured in a whole new way. And we'll also discuss how crypto assets and cryptocurrencies fit into this picture. So there's plenty of interesting and valuable insights on the way. So once you've listened to this episode, you can explore the links and other information in our show notes, and you'll find those in your podcast app. So let's get started with this week's conversation. Welcome back, Sean. Where are you joining us from today?
Thank you so much, Kyle. Happy to be joining you once again, and I'm coming at you from New York City today.
I know that we've said quite a lot about you and your work already, so...
Yeah, too much, possibly, yeah.
Well, we must have left something out. What else are you working on? What have you been up to since we last heard from you, and how does it connect with our topic today, which is blockchain for the insurance industry?
Absolutely. So really what I would say is that really there are two overarching trends out there right now. One is the rise of these sort of asset-backed coins or stable coins, right, that are really changing the conversation from a accounting point of view, from a financial reporting point of view, or from a insurance custody valuation point of view too. And really, as these different types of assets enter the marketplace, backed by large institutions or consortiums of institutions like JP Morgan, Facebook's Libra, all the rest, all of that is having a big impact on how the conversation is evolving and emerging, right, from this, Bitcoin-based conversation back in 2016, 2017 to the ICO almost bubble in 2017 and into early 2018, and now we are really almost entering a mainstream conversation with regards to how blockchain and the crypto assets running on these platforms are being actually handled by mainstream institutions. And so then sort of building on that, as all of these trends and these indicators really point to a more almost centralized and standardized approach to handling crypto assets and information stored on a blockchain, how do firms, institutions, and groups of firms handle issues like corporate governance, cybersecurity, and the internal controls over all of the information stored on a blockchain, be it insurance-linked, healthcare, auto insurance, property insurance, all kinds of other issues out there. So there really is a lot going on. So it's very easy to keep busy right now, Kyle.
So you've been keeping busy building your expertise in blockchain and cryptocurrency. So let's find a little bit more about where that all started and why you've moved in this direction. For those who don't know much about the work you do, how did you develop your skills in this direction and why? And how do you use these skills to help the organizations that you work with right now?
Absolutely. So really, the short version of the story is that before my current incarnation as a blockchain advisor, I sit on the boards of several blockchain-based organizations and all the rest. But before all of that, my background is I'm a CPA by training and education, and really a large number of the roles that I held and the work that I did was almost a halfway point between accounting, financial reporting, and IT. Basically trying to get the information out of internal systems or from our vendors, suppliers, partner companies, all the rest, and be truly able to harness that data to obtain the insights based on that information to help the firms and our partner firms, be they clients or our suppliers, to make better choices going forward. And so really all of this interest and the real sort of passion I have for the blockchain and the broader crypto asset space builds on that, right? Meaning that I think anyway, every aspect of accounting, taxation, audit, valuation, reporting, insurance, trading, banking, all the rest is really ripe for blockchain to come in and to help augment our current processes and to help us as individuals working in this field to, one, become more efficient and productive, and to also, two, be able to give better advice to our clients and customers now and going forward.
That reminds me why we've decided to look at blockchain for insurance in this episode, because so many companies, so many enterprises are thinking that blockchain works for certain things, but let's say for our assets, for the things we insure, we're just going to stick with the old system. I don't think there's a lot of realization that actually blockchain is going to have a very significant impact on the way that assets are registered, and the kind of work that a company will have to do to actually make sure they're ready for blockchain to be used in the insurance context. There's quite a bit that need to go on. So give us a sense of why this topic is so important now.
Because, as you mentioned, right now in the broader sort of blockchain space, we are undergoing a trend or a theme that I'm calling a pivot to, right? So the first pivot was from a public blockchain model, Bitcoin, Ether, totally open source, all the rest, to a private blockchain model, right? Organized and led by one institution, which is fine. And it does help some of the problems or help address some of those problems created by a public blockchain model. But really from a industry point of view, or from a attempt to get standards and frameworks established, sort of pooling together resources, information, personnel, and all the rest in a consortium model or a federated model is really sort of the overall trend right now, right? Be it in insurance, in accounting, retail, transportation, anything else. But really from the insurance point of view, a question that is just now beginning to be asked is great. As all of these different crypto assets come out to the marketplace, right? Be it Libra, be it, Paxos, Gemini Dollar, crypto assets issued by various national entities. How do we, one, account for those, and two, help ensure that the individuals and the institutions that are putting capital to work in these assets are actually, one, protected, and two, well informed as to sort of what processes have to be changed internally and externally. And all of that actually ties back to the insurance conversation, both, from an internal point of view at the firm and also on the side of the insurance company who is issuing these policies.
And this isn't something which is happening in silos, is it? This is something which is going to have global ramifications. I mean, give us a sense of some of the big companies that people globally would recognize that have recently taken on blockchain for supply chain. They've made blockchain mandatory in many cases, and that has global impact right now, doesn't that?
Oh, sure. I mean, absolutely, Kyle. I mean, probably the most high-profile example that I'm sure most of your listeners have heard of is the example at Walmart, right? Where by the end of 2019 / early 2020 now, every supplier in their supply chain that actually supplies them with leafy greens has to be on their own private blockchain. And so that is a headline, and it attracts the commentary that it will, but analyzing that has tremendous implications for everybody involved, right? Because right now the conversation on blockchain adoption, be it at JP Morgan, IBM, British Airways, FedEx, Walmart, Toyota, all the rest, all of those have focused on the big sort of Fortune 100 top tier firms in the world. But it's important to note that as the firms that are onboarding blockchain at this level, be it at those big and multinational firms, it's also going to have a impact on the suppliers in that supply chain going forward. So it's really important, I think, for anybody who is working in a management role, financial role, accounting role, to be able to understand and to be able to communicate what's going on, because even if it's not happening right now at your firm or your institution in the fourth quarter of 2019, I'd certainly put out there that by 2020 or 2021, it is going to be part of your everyday conversation.
This is something that is not going to simply sit on the radar forever. From where it is on the radar at the moment, very soon it's going to be on your desk.
Absolutely.
So let's talk about how those desks have to align, because for people who are already in the finance or accounting profession, who are already working with insurance providers, they know how those two industries work side by side as partners. But for someone who doesn't understand, let's say from outside the profession, can you just explain how finance and accounting professionals work with insurance providers so we can understand why this would impact one on the other?
So really, at the end of the day, right? I mean, and if we want to drill down to the core tenets of this idea, is that what a blockchain is, or be it a public blockchain, be it a private blockchain, be it a consortium blockchain, is a method by which institutions or individuals who are a part of this network are able to store and to transmit information to each other on an ongoing basis, and to do so in a manner that is encrypted, right? And so from a accounting point of view, or from a financial services point of view, that's a tremendous value add, right? Because internally at organizations, or more, I think, pointedly, if you were trying to get information from a supplier, from a partner firm, from an institution you are doing business with on an ongoing basis, it can occupy a huge amount of time. And more importantly, none of the effort or the people hours or the resources spent on trying to reconcile data, manually transfer information out of one system into the other system, and to, then format it correctly, none of that actually adds value to anybody in this whole conversation, either at the firms who are involved, or more importantly, our clients or customers. And so from a accounting and a financial services point of view, I mean, we all work with our partners in the insurance industry, right? Because all of us are dealing with huge amounts of data, possibly inconsistent formats and inconsistent ways to transmit that data back and forth. And so all of that creates a lot of internal friction inside our operations, and it can make it quite difficult for us to really get the information and the answers that our clients need, our internal, managers, partners, directors need to help make those more informed choices going forward. So from everything I've seen, this application and this adoption of a blockchain-based solution or tool in the insurance field is absolutely going to have an impact on the conversations and the engagements going on with individuals and firms working in accounting and in finance.
And that impact you've talked about is going to be a positive one, isn't it?
Yeah, absolutely.
So what makes blockchain as a technology so well suited to the practical requirements of the insurance or associated industries? We understand it's going to be a great fit in many ways. Is it already being used right now? And if so, how?
There are quite a few firms out there that have launched pilot programs, beta programs in a wide array of insurance areas, right? Be it in property insurance, be it in maritime insurance, property casualty, auto insurance, health insurance. I would say that the list of companies that have launched programs, projects, all the rest is quite extensive, and I could keep you here all day talking about it. But I would say that overall, yes, the benefit or the core takeaway is going to be one that is positive, right? Because at the end of the conversation, what the insurance process tries to do is, one, help insure, obviously, the clients or customers against external risks. And two, more importantly for our conversation here today, is to make sure that all of the variables and information that go into the pricing of the insurance and the paying out of that policy actually operate in a efficient manner. And so all of that requires a sharing of information between different institutions that might not operate on one common platform. So if it is possible to get one common platform or a industry-focused platform, be it for auto insurance, just for example, that by itself can really deliver quite a bit of efficiency and cost savings for all parties involved.
Now, I know that you have a particular focus on something which you've called the 2 T's of blockchain. I remember when we spoke earlier about that, I immediately thought that this was something that helps people remember why blockchain actually makes such a lot of sense in the context of insurance. So can you just flesh out those 2 T's?
Absolutely. So the 2 T's of blockchain, that's how you call them, are transparency and traceability. And so from a insurance policy point of view, one of the biggest pain points, regardless of what specific policy is being analyzed or all the rest, is how do we actually know that all of this information is correct, accurate, up to date, and that all parties are involved, right, and informed as to what is going on. And so really, that's where that real-time updating of this common record or common ledger of information is so critical to the insurance business. Because at the end of the whole conversation, what a insurance payout is trying to do, or a policy is trying to do, is to, one, ensure that all parties are informed as to what's going on, and that two, that all of those exact same parties are aware of their rights and obligations after the triggering event has occurred. And so really that transparency, allowing the institutions and the individuals who are involved, right, be it on the front end or the back end, the payee or the payor, to make sure that they're all informed and aware as to what is going on and then why it's going on at all times, is a real value add on the blockchain side. And also, just to add one other quick note here, being able to actually trace that paper trail. Now, if we're trying to link it back to accounting, audit, and assurance work, if I can trace a triggering event to the processing of that claim, to the paying of that claim on a blockchain, on a common platform that all parties involved have access to in varying degrees, traceability is invaluable to help offset fraud and errors and really other risks that do end up costing insurance carriers, and by extension us, all of us who are involved with them, billions of dollars annually.
So those are the 2 T's. Now let's figure out where this chain started. Because we know blockchain is certainly a disruptive technology, but we know that, especially in the conversations we have here on the podcast and conversations that, throughout the profession, And most businesses today, they exist in an atmosphere of change. That's how they innovate. That's how they remain competitive and move ahead from time to time. And, blockchain is no different, but it had to have a ground zero, a point of origin. So how did blockchain first start disrupting the insurance industry, and what's changing now?
I would say the first point of impact that the whole blockchain conversation had on the insurance industry actually comes back to the goal of the original Bitcoin blockchain, right? In that first white paper published in the fourth quarter of 2008, the overarching goal of this whole conversation, it was to improve the efficiency, the transparency, and the speed with which individuals or institutions could actually conduct financial transactions. And so that is really important, I would say, to any individual or any firm or any consortium of firms trying to launch a blockchain, is to understand that original point. The overall goal was to improve the traceability, the transparency, and the speed with which information, be it financial or not, but could be traded between different parties. And so really that overarching theme is now extending into the blockchain space as it's being adopted and onboarded by large multinational firms and by firms of all sizes. And so really, as we are doing that, it's important to, one, be aware of obviously the opportunities and the upsides, linked to this improved transparency, traceability, and efficiency. But really, I would say that the insurance conversation had almost come into the conversation as a 1A, right? That as blockchain is being onboarded by different firms, be they based in the US, international, be they for-profit, non-profit, all the rest, that as we have this data, be it healthcare data, auto data, property records, whatever else, stored on this commonly shared platform, what are we doing to help ensure and to safeguard and to protect all of this data on these platforms?
So you've just mentioned a whole lot of different sorts of insurance, and you talked about motor vehicle insurance, health insurance, property, there's casualty, there's life, there's reinsurance, all sorts. Several different sorts of insurances out there, we know that. So if you think about what this technology, blockchain for insurance, actually means in practice, will this blockchain impact, treat all insurance categories in the same way? I mean, practically, is it likely to be a kind of a cookie cutter approach, or are there different things that they will need to know and different processes or responses that they will have to adapt or adopt in order to take blockchain to the heart of their business in future? So
to answer your first question, Kyle, I would certainly hope not, right? Because every type of insurance is different, right? So just for example, if you're talking about healthcare insurance or life insurance, all of that has a whole other conversation linked to the data privacy regulations, be it here in the US called HIPAA or other sort of regulations elsewhere. I mean, that's a whole other conversation, right? Linked to what types of data can actually be shared between different, healthcare networks, hospitals, pharmacies, drug companies, doctors, all the rest. So I would say that to answer your question on the head, that I would hope that as this conversation continues and evolves, that there are some iterations out there, right? That there are different versions of blockchain for insurance depending on the type of data that is needed. And it's also important to keep in mind that as we're trying to roll out these blockchain-based solutions, platforms, and policies, that we are going to have to deal with and to try to operate with this whole operating conversation, we are going to have that conversation linked to groups like governmental databases, right? Personnel records, healthcare records, and all of these platforms and records might not be all up to date at the same level. So to summarize that, I say that one, there are going to have to be, I believe, iterations of this blockchain for insurance platform for the different types of insurance out there, and that too a core piece of this conversation that is not as sort of high profile or as a hot topic as blockchain itself, is that the underlying records and information are going to have to be made blockchain ready.
And that means best practices will apply pretty much everywhere. So we'll talk about some of that in a minute. When we continue our conversation shortly, we'll talk about the crucial role of crypto assets as well, and talk about how this works alongside blockchain for insurance. All of that is coming up in this episode of the Go Beyond Disruption podcast. It's brought to you by the Association of International Certified Professional Accountants. You can find out more about this podcast, listen to our archived episodes, and find out more about the rest of our project at gobeyonddisruption.com. Just scroll down the screen to find the rest of our episodes. So we are talking to a returning podcast guest, Dr. Stein Smith, who joins us from New York City, and we're talking about blockchain for insurance and beyond. So, Sean, when it comes to the other side of the insurance equation, those who are insured, how do they get ready to be insured in a completely new way using blockchain? How does a company make sure that their register of assets is digital so that the insurance provider using blockchain can insure them?
Excellent question, Kyle. Even though we're here talking about blockchain, crypto assets, and all of these other hot topics and sort of emerging themes out there, the actual practical steps for a company to have their records and their data ready to be uploaded or stored or added to a blockchain platform really are not too forward-looking or too sort of out there in terms of application. So really the first step that, and I do caution that every firm and every sort of subset of this conversation is going to operate differently. But I would say first things first is to make sure, one, that any personally identifiable information, PII, is removed from the records that are going to be posted on this common network or common platform. And then building on that, too, that in order to use a blockchain and to get the benefits of a blockchain, your information has to be stored in digital format. And so right now, in your office, in your car, wherever you are tuning into this podcast from, having records in a digital format could seem like a obvious step. But in many institutions, be it healthcare, insurance, accounting firms, all the rest, there is still a large amount of paper involved in the processing and the review and the paying out of claims and the review of policies and the issuing of new policies. So really, what I would say the first two steps that are most important is to, one, obviously to make sure that any personally identifiable data linked to those policies is redacted, and that, two, that all of your data after it's sort of ready to be uploaded is done so in a digital format that is consistently done at the firm, at the institution, at the insurance company, or sort of more pointedly at the company who is dealing with a insurer who is trying to roll out their own consortium blockchain, because it's important to actually note that the benefits and the upsides of a blockchain platform are not going to be realized if the data can't be uploaded onto that platform.
All right, so it's a process, but in professions like insurance or accounting or finance, we're quite used to processes. And so the process of these assets becoming crypto assets seems manageable. But as a company starts to deal with that whole side of things, as these firms get blockchain up and running, tell us something about how they would create policies that work for the assets stored on a blockchain. And how would that extend to the insurer protecting themselves as well as their clients that they're insuring? How would you advise clients to take, the right controls internally so everyone on both sides of that equation is adequately protected?
Yep. What I would say first is the most important conversation to have is a conversation between the insurer and the insuree to help make sure that everybody is on that same page with regards to how the platform is going to operate, who has access to that platform, and then also what type of information is going to be stored on that blockchain. But sort of more on the head right there in order to make sure that your information and your data, right, be it internal data or customer client data, is safe, it really is going to involve a conversation around the internal controls and the access to that data. Because it is important to note and to recognize that if I'm at a company and I'm working with a carrier of mine who is a part now of this consortium blockchain model or a platform, that I have to make sure that my controls and my policies and the workflows that I have in place are up to snuff, basically, or up to par with everyone else on that platform. And I do think that right here is a point that is overlooked all too often, is that if I'm a company and my carrier is joining or is launching or is part of a consortium of insurance companies joining a common platform, a consortium blockchain platform for insurance, I have to make sure, one, that all of my policies and controls and workflows and access rights are up to par with everyone else on that network, and that, two, that we have a process in place right now and going forward to make sure that we, as this firm joining this consortium, and that everyone else as a part of this consortium, update our policies and controls as need be, and also do have plans in place to actually deal with these unforeseen events, be it the retirement of a key person, be it a unforeseen event or anything else. We have to make sure that our policies and controls and that our approach to dealing with these things are consistent.
And we have to point out that when we talk about policies in this context, we're not talking about insurance policies, but we're talking about policies and procedures, that type of policy.
Yes,
right.
Absolutely. Yeah.
Okay. So you did talk about the importance of asking the right questions. So here's another one for you. What are the questions that people in the profession are still, perhaps sometimes surprisingly, asking you about blockchain? And how do you answer questions like that?
I would say that the top question that I'm still getting, even after all the conversations, podcasts, books, and videos on this topic, is that there is this overall belief in some areas that in order to have a blockchain, you have to use a cryptocurrency. And that's entirely false. I can have a blockchain operating without a cryptocurrency or a coin or a token. And so really, it's really important, I'd say, that for conversations internally or externally, or if you're having this conversation with a carrier who is joining a blockchain and is actually giving you from coverage, is to really make sure that everybody is on that same page with how this blockchain and broader crypto asset conversation overlap, and to try to make sure that everyone is on that same page with regards to how these two terms and platforms intersect, and then also how they are going to interact as they are onboarded, both at a individual firm level and at that consortium level. And then also, sort of the other key point that I hear quite a bit is that there is this idea out here that every single blockchain is a permanent record, and it's a immutable record, and it can't ever be changed or edited or anything else. And that is entirely false, right? Every single blockchain is different and is composed of software, hardware, and us, people. So anytime you have those factors involved, there is always a risk for a hack, a breach, or an error. And so it's really important for anybody involved in this conversation, be it at the carrier, at the firm being insured, to really understand that and to have the right controls in place to help make sure that only authorized individuals have access to the programming and the data stored on that blockchain.
That's interesting. You said that when people talk about blockchain being a permanent or immutable record, that's not necessarily accurate. In fact, it's completely wrong. So what are some other words we should be using when we're talking about blockchain?
I would say that probably the better phrase is tamper resistant, meaning that it can be awfully difficult to edit a record or to change a record on a blockchain platform, but it's also important to just keep in mind, right? If we analyze this from a 20,000, 30,000 foot point of view, does a organization, be it a insurance company, be it the company being insured, want a truly permanent record where every single piece of data entered on there can never be changed, right? I mean, because errors happen, and so it's really important to have at the core that flexibility and that capability to go in there if need be to update data, change data, to edit data, to be able to flex with the changing data coming in from the marketplace. And so really, I do think that's a core thing that has to be talked about up front.
Pretty much like thinking about Superman. Tougher than the rest of us, definitely more resistant and definitely built to put up with a lot more than anything that's come before. But ultimately, you've got to remember kryptonite.
Yes, absolutely. Yeah. That's a great analogy. Yeah.
So let's think about this. When you talk about the little players and the big guys, people have, I suppose, fallen into this idea that when you talk about blockchain, when you talk about cryptocurrency, crypto assets, it's always got to do with this new startup or that new startup, or that's how we seem to see these headlines contextualized. But now crypto assets and blockchain the different blockchains are now being issued and deployed by much bigger entities, aren't they?
Yes, and I do think that also points to that overall shift that I covered earlier, right? That sort of pivot from sort of an open source, totally decentralized way of doing business to a platform and a manner of harnessing blockchain more in alignment with existing frameworks. And so, yeah, I mean, there are companies, Allianz, which owns PIMCO, which any audience members here in the US probably have heard of, is launching their own blockchain platform. Swiss Re is also launching their own blockchain platform oriented towards the insurance business. There are entities like EY who have partnered with other firms trying to build up maritime insurance platforms. And of course, IBM is a major player in this space. You're partnering with Maersk to launch their TradeLens platform for international shipping, and now are also trying to launch a insurance-based platform to help the firms that have joined their TradeLens platform to help insure their information and their cargo being shipped via this network. And so, yeah, I would definitely say that I'd say ultimately in the fourth quarter of 2019 and also in 2020 going forward, I would say that there are going to be quite a few more mainstream almost adoptions and rollouts of blockchain, both for operational purposes and for insurance applications too.
And will this just be companies, or are we expecting to see perhaps governments getting involved with this as well?
That's a very interesting question there, Kyle. And I'd say ultimately, I would say that any governmental entity that is involved in any data management, which is all of them, is going to be interested in trying to use blockchain to get better traceability and transparency into that data that is already being collected and stored anyway. And there have been a few headlines out there, be it PBOC earlier in the week, or other sort of national entities or governments trying to sponsor blockchain sandboxes, ecosystems being open to investment in this space. I would say that really with individuals like Christine Lagarde or Jerome Powell talking about topics like crypto assets and blockchain in hearings and in press conferences, I'd say that it's really only a matter of time until these governmental entities or some sort of international body really sort of come out with either a platform or a product or a solution in the blockchain space.
Right. Looking ahead, our typical listener likes to keep ahead of the curve as well. So help us out here from your perspective. Based on your experience, what's the next disruption you see coming in this context?
I'd say going forward from the blockchain space overall and how it connects to insurance, reinsurance, all the rest, what I would say really is the next disruption going forward is fines. So all of these platforms are out there, launched by entities or consortiums of firms. But how are they governed? Meaning, who is a part of these platforms? How are those individuals or firms added? And then is there a process to remove individuals or institutions if need be? And so I do think that's an important question to keep in mind going forward, that as all of these platforms launch, right, be it at a corporate level, at an individual level, at a governmental level, that are there the correct processes and controls and workflows in place to help make sure that only authorized parties have access to certain classes of data, and that two, there are processes in place to help make sure that only, authorized or qualifying members or firms, be they individuals or firms, actually are part of this network and are operating in accordance with the rules of that blockchain.
Does that mean that something like a blockchain alliance? I know there are many major cities which have local blockchain alliances. Would you say that that is something to really make sure you stay aligned with or part of?
I would say so, yes. I mean, because in order to have these conversations and in order to drive that dialogue, both at a firm level and at the regulatory level, there is going to be a increasing need, I believe, for a common voice or a common platform out there. And so definitely being a part of a alliance or a chamber or a group of individuals and firms that are sort of like-minded is going to be more important going forward.
Okay, so let's do some signposting for someone who'd like to find out more about blockchain for insurance in general, or perhaps about your work in particular. What should someone type into their search engine right now so they can get started? What are some resources you'd recommend?
Sure. So I would say the first place to start is AICPA, blockchain for insurance. There is a excellent course out there right now analyzing the upsides, downsides, opportunities, and challenges for blockchain for insurance out there. And if you're focused on more sort of overall blockchain, so crypto asset knowledge, there are some excellent websites out there. Coinbase and Cointelegraph and CoinDesk are all great resources to read and to download on your phone every day, and to try to keep up to date with all of these changes going on right here. And as far as me personally, the best way to follow me or to get into touch with me is on Twitter at Stein Smith, or on LinkedIn at Stein Smith.
All right, and we'll put those links in our show notes as well, so people
Perfect.
who may not have written that down, they can still key down through the show notes to this episode and link to you straight there.
Great.
Right. Finally, one actionable suggestion that you'd like to leave for accounting and finance professionals that will help them go beyond disruption. What's the one thing that you reckon when they're thinking about blockchain, perhaps in the insurance context, perhaps in the wider context?
Sure.
What's one thing that you would like to leave them with?
I'd say two things, right? One is to really understand that every blockchain is different and that every crypto asset is different. So in order for us to give good advice to our clients, be they internal partners or external clients, we have to be able to understand and to be able to communicate how these blockchains work, as well as the upsides and the challenges linked to those blockchains. And then two, I'd say really the education conversation is key. There is no firm or no person who has a monopoly on information in this space, be it blockchain for insurance or blockchain overall. And so obviously that is a challenge for trying to develop policies and all the rest, but it's also an opportunity for individuals and firms who are proactive and are forward-looking. So I'd say really education and engaging in this conversation are key.
I think that's pretty simple. Sean Stein Smith, thank you so much. A great place to end our conversation today. And there's, as we've made quite clear, plenty more to explore about blockchain for insurance and beyond. So the show notes will have links to all the resources we've mentioned, as well as going to aicpastore.com/go-beyond-disruption, or the cgmastore.com/go-beyond-disruption for courses, webinars, and other professional development resources to keep you ahead of the curve. Thanks again to our guest, Dr. Sean Stein Smith, Chair of the Accounting Working Group of the Wall Street Blockchain Alliance. And of course, thank you for listening to this podcast. If you've enjoyed the episode, go tell someone about it. You can even email us using the feedback link in the show notes and tell us what you'd like to hear more of. Let us know what you think. From our London office, I'm Kyle Hannon. We'll be back soon with more conversations that help you and the profession to go beyond disruption. Till next time, goodbye.
Thanks for listening to this episode of Beyond Disruption, brought to you by the Association of International Certified Professional Accountants. Learn more about today's topic at AICPA-CIMA.com/disruption. This podcast is designed to provide illustrative information with respect to the subject matter covered and does not represent an official opinion or position of the Association of International Certified Professional Accountants or any of its subsidiaries or affiliates. It is provided with the understanding that the association, its affiliates, and subsidiaries are not engaged in rendering legal, accounting, or other professional services. If such advice or expert assistance is required, the services of a competent professional person should be sought. The association, its subsidiaries, and affiliates make no representations, warranties, or guarantees as to and assume no responsibility for the content or application of the material contained herein and expressly disclaim all liability for such damages arising out of the use of, reference to, or reliance on such material.